Thursday. Little Thursday, a little noise. We got a lot going on, a lot to block out. Non-farm payroll morning. We had some unemployment claims today. Had some Feds. We had President Trump apparently on a call with President Xi from China. We got a lot of drama going on between Trump and Elon Musk at the moment. Does the market really care? Well, it's been a noisy day. Been a noisy day. I'm not one for short-term price patterns like this because it could just be a bunch of noise. However, I did post a video yesterday on YouTube. I posted it in my Telegram channel, posted it on Discord, posted all over the place, posted through TradingView. This trend line does mean something. So I think if you're paying attention, this trend line is the April 7, April 21 lows, still support. What's going to be interesting is tomorrow, time alone is basically going to be on the right-hand side of the trend line. You know, so if I think a better feel for this would be, let's go into the futures market right here and bring this chart up. And let's go back to the April 7 lows here. So because we can trade 23 hours a day in futures, this might be a better way to see where is the market going to go. Because I wouldn't be terribly shocked if going into non-farm, it just goes dead sideways going into the morning, right? So, well, here we go. So if you connect the lows, this is the ES market, so futures S&P 500. That would be, that's not right. Is that right? That's not. I need to go way back. All right, hang on. I need to go back further. There we go. Did I go back? Yeah, like way back here. April 7 lows. Oh, just got to go a little bit further back in futures. There it is. All right, let's connect the dots here. So we'll go from this low to this low and see how it looks. Interesting. Well, looks a little bit different. Connect the lows, connect the lows, connect the lows. We have spent some time just drifting on the right-hand side of this trend line. So just because we're on the right-hand side does not mean it's an automatic sell. Okay. To me, what this means, however, is that if the bears, especially in the futures market, if the bears take out this level around 58.75, so 5875, if this support level is broken, then I would say we have a correction. So are we going to take out this low? We have highs, we have highs. We're not that far away from all-time highs, but are we going to pull back? Are we going to correct more? Are we going to keep melting up? Okay, look, even if we tested the high, hit the backside of the trend line, and we still sweep these lows, I think there's still a correction. So just be on the lookout for some volatility in the next maybe week. We have non-farm tomorrow. See if it's a positive number. Average earnings. Let's go to Bloomberg. So Bloomberg. Let's just go to Fridays. We can take a look at the data here. So 8:30 a.m. Average hourly earnings. Previous was 0.2, expected 0.3, or average hourly earnings year over year. 3.8 was previous, forecasted 3.7. Weekly hours, 34.3, looking to stay the same. Non-farm payroll, 177 previous, forecasted 127. The unemployment rate, previous 4.2, forecasted 4.2. Canada also has some employment coming out tomorrow at the same time. Possibly looking at some CAD trades. So, dollar CAD is going to involve both currency pairs, pound CAD, euro CAD. Maybe an interesting trade if CAD has good employment. I still like CAD Swiss. I still like Aussie CAD, New Zealand CAD. I'm actually bullish on those. I actually like Aussie CAD long, New Zealand CAD long. So we will see. But for today's price action, here's today's price. right there on the right-hand side of the SPY. We're just kind of flirting with this trend line. Time is going to be done here in the next hour, so we're only getting about, what, 10 to 12 more candles, and that's a wrap. And then we go into tomorrow. I would say we just take a look at the futures market. Key level, I'm going to actually box this in. Let's see if there's any confirmation direction from breaking this high or breaking this low. So trading overnight there. That gets me into tomorrow. Yeah, we'll see how this plays out. So I'll box that in for tomorrow. And per the futures market, we are on the right-hand side of the trend line. Let's go to NQ for a second. Look at that as well. Zoom out, go back to the April 7 lows. This one seems to be hanging in there as well. So connecting the dots, make this a little bit thinner. Yeah, it's right there. Okay, so just kind of, right side of the trend line, drifting up the back side of this trend line. Qs, if I box this one in, that'd be the level I'd be watching. So if you are looking for price action to provide some confirmation to the downside, I wouldn't be forcing sell trades unless we were seeing a break below 21,000. So NQs below 22,000, and the ES feed here would have to be below about 58, about 58.50. Okay, I'm actually going to post. I think that's a good looking chart to watch. 15-minute time frame. Take a screenshot. I'll post this in Discord. I'll post this in Telegram. Some key levels to watch. Key levels. Highs around 6,000 and 58.50. $6,000. Okay. And on the Nasdaq, right here, highs around 21.9, 21,900. And the lows around 21. We'll say 21,000. Yeah, that's fair. 21,050, 21,000. Okay. So some key levels to watch. So we got S&P futures, Nasdaq futures, flirting with the trend line, also watching price action. And again, tomorrow might be a noisy day. Non-farm might come exactly as expected. Maybe there's a big whiff. Maybe there's a big beat. I don't know. Watch price action. I'm not going to force any trades. So portfolio has some hedge. We'll see if we need it. Today is a pretty red day. Probably a lot of that. Let's see where the P&L is coming from today. So we are looking at P&L on the day. Most of this is, so silver's up big, Baidu's up pretty big, a little Norwegian Cruise Line's up a decent amount. Got a Nice move here with a long-term condor because we're selling off a little bit. That is very nice. Still down a little bit on the net positions by about 60 bucks. Futures up with some hedges. Okay, let's go to the downside today. Tesla. I had a feeling Tesla was down. Tesla's down like double digits today. So you got some Musk-Trump drama crushing the stock down. I'm still up about 50 grand on Tesla, so I'll take it in stride. But my gosh, this was literally trading at 340 earlier today. Good Lord, man. This is so stupid. Look at this thing today. Just dumping. Wow. Well, the nice thing is my covered calls are at 277.50 and 310. So um, that was quick. I might end up taking some profit on those covered calls real fast. So my puts are actually doing pretty well. I mean, they've come back a long ways. I'm gonna organize these where I've got some hedges here. I went up to July 18th at $100 put. It's way out of the money, but somehow this is only down, 18 bucks. So if this continues to crater and crater fast, I might turn 61 cents into maybe a couple of bucks and lower my cost basis a little bit more. Did today's job figures come as a surprise to you? What jobs figures? We didn't really have any jobs figures today, did we? We just had the ECB cut rates. We had unemployment claims came in slightly higher. Revised non-farm, like there weren't job numbers today. Job numbers yesterday for ADP that came in way softer, but ADP I've never really considered as a big deal. Non-farm is usually the one that matters the most as far as the market goes. So Friday, Friday is going to be what I pay attention to as far as like job numbers, right? I mean, if you remember August, it would have been August 2nd last year. If you go to the 2024 calendar, let's go August. So July to August was the big. Is this right? 5th and 7th, 59.40. All right, making some fresh lows. You know what? I might get a little profit trap this afternoon. What's up with this SPY? Let's get some SPY action here. There we go. So we've got a little double up fly working for the afternoon, up 33% right now. Maybe a profit trap at the 590. If this thing dumps hard, maybe even a better surprise than that. So let's see here. This one's up about 33%. This one has a bit more to go, but this one's dirt cheap. We will see. 585 is a bit of a stretch, but 590, we're at 592. I mean, that would be an unfortunate event if we see this thing drop to 590, but I would not mind it. Anyway, what I was going to talk about was the 2024 calendar. This year's low is April 7th. Last year it was August 5th. That was a Thursday, Friday, Monday. Sunday was the night that futures market was down big time. That was the big bankage band deleveraging event. All of it kind of started to top out in mid-July anyway. Just nobody was really braced for the higher volatility. But Monday the 5th was a pretty nasty day. That was a huge gap to the downside. It all dumped like in Thursday, Friday, Monday. Now, my point of that was Friday was a non-farm payroll. That was what activated the SOM rule, which is your short-term trend of employment. Was your unemployment was peaking higher or trending higher than the 12-month, and it was activated. I think that's what kind of spurred the Fed along to react in September with 50 basis points. So anyway, we'll see. All right, let's see what happens here. Got a nice little win going on this guy. I think I'm going to take some profit here. I'm up about 60 bucks in this trade. Let me see. This is the 90. See if I can get like 40. It's a little crazy right now. This trade was like a 20-some cent debit. So 21 cents. See if I can close this thing for Let's go to 45. See if we can close out 45 and take a triple digit. I mean, we're dropping like it's right in my wheelhouse, man. I don't know if this is going to stay at 590 for the next 42 minutes, but I'm over 100% in gain. 128%. Let's go. Close me out, dude. Okay, so 40. I'm going to try 45 again. I might work it down a little bit. I mean, price is dropping. We're 591. Let's go. Give me some fills. I mean, my ask price is 40. All right, this is a little bit wider. I'm going to penny this thing down, see if I can get filled. Price is lower. 43. Come on, don't miss this thing. Good Lord. Sometimes it's like SPY is liquid. Son of a biscuit. All right, I'm just going to keep penning this thing down. I've got to be able to get filled in this trade. All right, got filled for 39. So not a triple digit, but 39 minus 21. That's an 85% winner. That is times 300. So about 250 bucks. I'll take that win. The other one is still going. Like maybe we drop to, I mean, who knows, man? Maybe we like quickly drop. I'm just watching this stuff in real time. So are we going to drop all the way down through 590 into 585? If so, I've got a dirt cheap butterfly spread today that might actually pay me. That's a big move though. We'd have to drop like another 1%. That'd be a nasty day. And honestly, I don't think there's anything nasty about today other than Donald Trump and Elon Musk fighting. Am I wrong? Am I missing something else? Oh, lead the unemployment claims? Meh. I mean, well, I guess let's look at the trends, right? Let's look at the trends. All right, so close up that one. I've got one more. This one's break even. I mean, rather than losing 20 bucks, I could just try to close this thing out for break even. So let me see if I can get out of here for 5 cents. All right, I took a 1 cent loss in that one. So the 21.39. Okay, so I mean, I'll watch. I mean, there's still 38 minutes left to try to get that, but it's so difficult to get a perfect little butterfly at the end of the day. When I've got about 100% on these butterflies, I try to take the profit. I had one today that was closed out for 136%, 85%, 40%, 220 was a good one this week. So I don't try to get super greedy on these things, but I'm always curious at the end of the day, right? End of the day, it's like, could I, should I, would I have made money if I left it all the way to close? Butterfly spreads have that ability to have that big profit trap at the end of the day, but the whole trade starts out with like a very high reward to risk opportunity. It's a lower probability, which is what the trade-off is. So anyway, I'll take it. We'll see what happens for the rest of the day. I don't think there's anything wild and crazy happening outside of headline news on Trump and Musk. I mean, I think that's where most of the noise is today, honestly. So Tesla is getting just crushed today. Palantir's down 6.45%. Curious if there's news there. Tesla down 14%. Gosh, I mean, is the whole trading world just this sensitive? Where it's like you hate Tesla, you dump it 55%. You love Tesla, it's up. I mean, percentage wise, I mean, what's this gain? So post election, Elon Musk does no wrong. Somehow the stock disappoints. We got a Mag 7 rotation down 56%. Worst things gets priced in. The stock's up 70%. Now it's giving a lot of it back. Just emotional. Emotional. Not long ago, US 30 was nice up, suddenly bloodbath. Yeah, I mean, we're getting some broad market selling today. I mean, take a look at this. Let's just go. I mean, this is why, look, yesterday, that video that I posted in Telegram, in Discord, and on TradingView and on YouTube, it's like, this is the trend line I've been watching. Connect your lows. We're on the right-hand side of it. And we are starting to look like we're sweeping some lows. We took out today's low. We are going lower. I'm not saying this has to take out lows, but look, if we take out these lows, this is why I was posing the question. Are we going to hit all-time highs, or are we going to pull back? All you needed was a little Trump drama. We got some pullbacks. So anyway, we'll see. I mean, this could just be a bunch of intraday noise. Maybe today doesn't matter. It probably doesn't. But does it really derail the entire economy? Like, no, it's just noise. And this is a big company. I mean, I don't know what this was at the top here at 367, but I would imagine that the market cap was a lot higher than it is now. I mean, we were down here to like, I don't even know what the market cap was, but it was not over $1 trillion. This is a $1 trillion+ company. Then it wasn't. Then it was. Probably isn't now. 880, 885. So, drama. Dean says sold a 59.80. Bought the 59.85. Closed for $100. Nice, man. When'd you close it out, by the way? Yeah, I closed that trade out today for 70 cents. So I pulled in $1.20 and closed it out for 50 cents. Made 70 cents on that trade. I mean, overall, I actually piecemealed a little day that was okay. I ended up grabbing about what was my winner here? So I grabbed a 40% winner. Let's do the numbers. So I had 40 and 39. I'll just do a calculator versus me typing on the screen. So 45 and 39. Okay, and then I lost 1 cent. And a 60 center, so plus 60. And then I grabbed a small profit. I grabbed $30 out of a daily profit play today. So that was small trade, just got out. So 90 cents got out for 30. So another 30 there. Grabbed 70 on the bull put spread yesterday. So $243, not bad on the day. And the market's just doing what the market does. We're starting to see some technical breakdown here on the right-hand side of the trend line. Okay, fine. Do I think the S&P is in jeopardy? Not really. I mean, if we're in jeopardy, we have a big job miss tomorrow, and the market takes it as, oh my gosh, what is happening, and we sweep these lows. If we break these lows, then we're having a real conversation of maybe coming back to fill this gap. Okay, so on the right-hand side of the trend line, I'm certainly a little bit more cautious. Going into tomorrow's non-farm, I could see a lot of noise. I would say the numbers would have to be exceptionally good to go back up, to take out the highs again. So I wouldn't be surprised if we have some noise. Maybe the bears have their time. And if it's after, it may not be non-farm tomorrow, it may not be like intraday price action tomorrow. It might be next week, but the more time we spend over here without making highs, it's almost like it's easier for the market just to roll over a little bit. So let's see how valid this trend line is. So, here's NQs breaking down. I was going to go this and just kind of flash through the indexes. So here's 5-minute charts. Okay, just in the last 20 to 30 minutes, this has really peaked out around 3 o'clock today. So I mean, I'm not talking about the noon high. I'm talking like these last little bits just selling off. So we had a nice little flush here for another maybe 0.5%, 0.8%. So overall in the day, from top to bottom, markets moved about 1.3%. So S&P is now down over 0.5%. Nasdaq is now down 0.8%. Dow 0.3%. Russell, surprisingly resilient. It was up on the day and then kind of flat based on the open. So we're still down slightly, but 0.25%. Volatility jumped up about 5% today. Bond volatility, anything here? I'll go back to SPX, SPY. So there's my SPX trade this morning. If anybody's in my daily profit play, I mean, I hope he didn't sit on this trade all day, but that was the plan. There's your call side, there's your put side. Plenty of time to make some profit. Obviously, got a little nasty here towards the end of the day, but I would say up until about 2 to 3 p.m., that's a pretty good trade. Just staying out of the way, making some bucks today. Very good. Caught the beautiful trade on Dow Tuesday, yesterday, and today. Different story. Okay, Lee. So let's see if this one continues to sell and close at the lows today. SPY 592. So I'm just curious, just for my own entertainment. I do have a pin. I had a pin at 590. I have a pin at 585. This one I closed out for 85% on the butterfly spread. This one I closed out for a 1 cent loss. So it was a 0.01 loss, so negative 0.01%. This one was a plus 19 net. I did that one on 6 contracts, so I made a few bucks there. But I'm just curious at the end of the day, like if it's a 592 by 590 by 588, if price is in that trap zone, there's my butterfly trap. It's good for potentially $200 for risk of about 20 bucks. This one was only 5 cents that potentially offered $195 of profit. And I closed it out because I just didn't think we're going to get to 585 today, which we probably are not. In the next 30 minutes, I doubt we're going to 585. So I think I managed it okay. But we're down. Qs, have a look at intraday. So up, down. I mean, you can kind of see a little topping pattern here. I wondered if this was the case, but we were on that trend line. I also didn't think we'd really break the floor with non-farm coming in tomorrow. I thought we'd kind of close out the day, be right in the middle here, and then tomorrow's like a non-farm. What are we going to do, up or down type day? So it could be a little bit of a preview for, maybe the pressure has shifted where sellers are in. Perhaps this is if the market is so bullish right now. I mean, we did have about a 1.9 to 2% pullback. So the Qs are down 1.9%. S&P is probably down 1.3, 1.4%, 1.3%. Yep. So, I mean, if this is a preview of things to come, where there's a bit of a power shift dynamic here in the near term for the bears to take things over slightly, then off we go. Advanced decline. See what's happening. So go heat map. We've got 51% of stocks declining, 45% advancing. Some big down moves. Costco's down. Let me check a little Spotify. Spotify's up to new highs. Son of a biscuit. I need to see if this will. I've got a butterfly spread up here with a 670 pin. I need to get this price back down to 680 if possible. 675 would be fantastic. 680 would be break even. Otherwise, this defined risk. I take a full spread here, but I'm definitely risking up here. I'm risking like 1%. All right, so chart alarm is set. All right, let's see what else is going on. Costco, Walmart barely down. Costco was blood red today in the heat map. Look at that baby. So Costco had positive earnings, but a big drop. Interesting. Yeah, just one of the few. So defensive's down a little bit. Tesla just getting obliterated. Palantir. See what Palantir's charts look like. Not a huge move. 134 to 120. I mean, a pullback. Is it going to be more to come? Is this a top in Palantir? Maybe. How about Mag 7? Nvidia, not doing much. Apple, down a tiny bit. Amazon's actually slightly up on the day with a gap higher. Broadcom, slightly higher, but giving some of it back. It's flat. Google, up a little bit. Meta, topping out. Microsoft, I got a chart alarm that we clipped the highs today, which we did. So we clipped some highs. We are overbought. There's some overbought conditions on Microsoft. Netflix, 1250, going to fresh highs today. Nvidia at 140. Tesla just bye. Crazy. I still do like the stock. I just think that it's going to be a lot of drama. It's going to be a lot of drama, a lot of volatility. I've already kind of extended myself to the point that I'm okay, fine in Tesla. The shares that I have, I believe, 400 shares of Tesla. Let me check here. Let's go. Tesla. So I've got like partial shares, but 1, 2, 3, 4, 5, 6. I have 600 shares. Okay. And then puts. I don't know if these puts are going to pay, but if we keep having a big dramatic drop, then they will pay. That's a. I mean, I've got long puts, I've got hedges, I put on a collar trade, I've got covered calls. We'll see. Covered calls June 27th, covered calls June 13th. That's next week. So the plan was to roll. Like right here, it's like this was up $3,000 today. Now it's up $6,400. So if I can take as much out of this as possible, there's only 8 days left in the trade. So that covered call is doing some pretty good work. Let's see here. Problem with trading the emotional people who trade. Yeah, I mean, I get it. The market is emotional. I mean, this is what is just it can be frustrating, right? It's just too much noise. Every single day, it's just like 4 or 5, 6 things. It's like you're just dodging, dodging. It's like you just don't know what matters. Does any of it matter? Honestly, I'll say this: if you want like the most streamlined way to trade the markets, pay attention to earnings and interest rates. I mean, if earnings are climbing, stock market's going to go higher. The one thing that never really happened this year, especially getting through Q1 earnings, is we didn't have really any revisions. Like there was no forward guidance. Um, the revisions were like they're not revised lower, right? And I think that's the reality. It's like, okay, so we had this huge dip in March and April, and revisions of earnings forecasts like didn't really change. Everyone's like, yeah, earnings will be fine. Earnings will be up. They're expecting higher earnings per share in the S&P. So we just kind of maintain these levels, and here we are, just a couple percent away from all-time highs. You know. So anyway, if there is an earnings revision, so right now the S&P is around a 22 times price to earnings. Okay, historically that's pretty high. I think our historical average is around like 17 to 18. Okay, when we've bottomed in the markets, we were down to like 14 or 15. Sometimes lower, sometimes single digits, but like when we've had some of these recent 2020 correction, 2022 correction, 2008, 2009 was down into like 12 or 11 price earnings. But anyway, it's just historically high. So we will see. Maybe this is a crazy year where we don't break highs. I think we will. I think we still will. It just depends on how dramatic this gets. I mean, I don't think a move back down into that U.S. China trade agreement gap is a bad thing. I really don't. Okay, but it's how we get there, how fast we get there, because like this was kind of head spinning volatility. If we drop really quickly, that could be head spinning volatility. That is what makes trading difficult. Like the options market, especially IV goes from. I mean, what was IV today? This SPY IV rank was a 14. What is it right now? Probably hasn't changed much, but I can promise you it's going to be different tomorrow. Okay, it bumped up from a 14 to a 16. Now it's 15.8. Do we stay here in the teens? I mean, during the March April sell-off, this was up into the 60s and 70s, right? The VIX was 60. A lot of volatility. So, I think pullbacks would be great. I mean, I'm still interested in positioning for pullbacks. A lot of my positions are down here because of wanting pullbacks. If volatility goes from a 17 VIX and jumps up into a 25 VIX, well, that's going to be a problem if you're short premium in the low volatility environment as opposed to sitting on the sidelines wanting to see some higher volatility. This has been me. I've been sitting on the sidelines waiting for some volatility to spring back to life and then start deploying some capital and going after it. Okay. Yep. Dean, debit, credit, 946, 215. Got it. Got it. What was so debit? What'd you do? Did you a bull? What was that trade, Dean? Did you do a bear put or did you a bear put spread or a bull call spread? Because you got out 215. Like that's good. That was when all the drama happened, really. Okay. So we got a few more minutes here. Let's just have a look here at the charts. So are we making a slightly higher high? Is this trying to reach some type of rising wedge position? Maybe this is the bigger trend line. I'm connecting the dots here all the way back. Maybe that's a little bit too steep. I'll still go back to this. I think this matters coming into tomorrow's trading, right? If we hold all the way back here, lows from April 7th, lows again, time is on the right hand side of the trend line. This is literally what my video was about yesterday. So we might have another day of shaking out, okay? But if this starts to give the bears the upper hand, or I guess the bulls would have to make another charge higher above like 60-20, 60-30. But if it's just a noisy zone and this thing rolls over, there's plenty of time, or there's plenty of levels for the bears to come in and backfill. We've got a gap here around 5,800. We've got a gap down here at 57 and 5670. And you can just look at this as a swing. If all you did was take this low to any of this as a high, and this isn't like perfect science here, but just take this up to a general high. If the market pulled back, let's say, let's carve out some levels here. So if the market pulled back, here's a 30 to 38% zone. Draw this a little bit larger. So 30 to 38% right in here. 50 to 61% right back in here. I don't think this is a bad trade. As long as I could take trades where my April lows are my like bottoms. I mean, if I took ownership of SPY at April lows, I'd be okay with that. If we came back to April lows, I have huge hedges that would actually start to pay out really, really well. So we'll see. But I do think I'd still be taking some stabs at some premium in here, just in case this market can shrug it off, try to get back to all-time highs. So yeah, a lot of drama. Too much noise. It's Thursday. I'm glad tomorrow's Friday. It's sometimes a little exhausting, but you just grind. If you're short-term trading, you just grind through the day, survive the day. You just keep putting your best foot forward every single day. That's all you can do. Make sure you don't do anything silly. No crazy amounts of risk, no crazy amounts of aggressive trades. It's like just money adds up. If you make $50 a day, $100 a day, like it adds up. Obviously, you can scale it, but There's plenty of opportunities out there in the markets. Just don't blow it on one stupid bet. All right, let's do some other stuff here. Let's go currencies. Currency strength. Funny, again, like just this weird disconnect. I mean, weaker yen today, weaker Swiss today. Stock market, US is a little bit noisy. I really think this is just like Trump and Musk, kind of dominating the headlines. By going to some currencies, Aussie CAD, I'm still waiting for a pullback in here at that 5.0 level. Aussie Swiss, kind of still sideways, but hoping we push back up in this cluster and 200 moving average. Aussie yen, right side of the trend line. I'd be careful on the yen pairs though. Aussie New Zealand. I'm actually going to put in another trade right here. Can I not? Yeah, I've got a pending order down here at 106.20. So I'm just thinking of putting in a smaller trade here, maybe a 4999, and then this one's going to be a 5001, just unit size. Aussie is getting a slight positive swap in this currency now, so I'm hoping this will go from like a 106 back up to like a 112, or if we pull back deeper, all these amazing lows just off of parity, I'm just going to scale in and build an Aussie New Zealand long position. Aussie dollar is trying to head a little bit higher, but it's still pretty choppy. If we have, chopping the dollar, chopping the Aussie, does this thing fall back at all? I'd still be waiting for this trade actually. If we get a pullback here, this is such a good looking swing trade. Currencies, I rarely buy high in currency. I rarely sell low in currency. So if this is just setting up for a fake out trade, I wouldn't be shocked if it pulls back at least to the same lows again, or maybe pull back into this support and structure. Then you can put the swing stop in, then you can go after symmetry, get us to 68.50 or so. Okay, CAD Swiss still going after 6,200 and all the way up here towards 6,400. I'm going to hold out for that. CAD Yen, you had your chance in March and April. Yes, Swiss Yen, no trade. Euro Aussie, nothing. Euro CAD. I wanted to hold a short here. I should have just entered a sell trade around 58.60. I should have sold this high. I didn't. I don't know if this is a weird head and shoulders pattern that maybe comes back up but still breaks lower. I'd said this, if I had a chance to, sell this high, maybe sell this high, and then try to get this low again. So look for some higher reward to risk, not really letting price go too much higher than like 6,100. Mansour asking about hedging. Yeah, I actually have a class. It's called Crash Insurance Masterclass. Let me see if I've got the link is still valid. prosperitypub.com/crash. There's a webinar here, so it's basically like it's a hedge class. It's like 197 bucks. I think we did like 6 classes together. We were 2 for 2 on the hedges during the duration of the trade. I'm always looking for opportunities. I hedge my portfolio routinely. It's not like off a cuff. I usually just have a planned hedge to protect. Usually about 5 and 10% of my account. I try to give myself like asymmetry hedges where if I'm risking like a quarter 1%, I can make 1% or better. If I feel like we're in a really nasty environment where I want to have like a big hedge, I was putting up a half of 1%, but the trade could also cover almost 10% in protection. So anyway, if you want to check that out, this is Flash Meeting. I'm not sure what this is. This should be the link. This should be the link. But if you want to check that out, there'll be a webinar for it. But yeah, the class is 197, and there's a bunch of good education pieces, master classes. It's not that difficult. I just use options. I trade futures primarily. I trade the SPY. I trade indexes. I'm usually an index hedge trader because that's really what I'm hedging against is a core position. If the broad market is down, I want to hedge against that, right? If the broad market's up, that's easy. Broad market's down, everything goes with it. You can hedge with gold, but gold doesn't necessarily always have to go up. You can hedge with Bitcoin, but that's not a hedge. That's risk on, risk off. So that's the hard part about trading equities is because sentiment is so key. If the broader market is bearish, it's like there's no real safe place to hide except for maybe currencies. If you're just spot trading, currencies are like the best place to hide out because you can obviously trade, bullish or bearish in symmetry or in currencies. But yeah, I mean, I just like using options. So, like example, I have a trade that I was risking $900 to make $40,000. So if we went back to revisit April lows, I'm making a lot of money. It's not going to be fun, but I'm also sitting on like 55% cash. And if we go into um, a position where the market's going to be dropping hard. I mean, like example, I mean, we're down today, but MicroStrategy is down to about 369. So I'm going to check on my play right here, MicroStrategy. So I've got a 330 put that's up $300. So I've got a $10 debit that's trading for, 12.79, $13. See what this is trading for right now. Yeah. So I mean, I'm up a couple bucks. If this gets worse, I want to have this protection. So I mean, I have hedges on individual positions, like a collar trade for core positions, and then the entire portfolio I try to hedge to get myself somewhere between like 5-10% protection. Yeah, time wise, probably quarter by quarter, maybe half a year to a whole year. I mean, it doesn't have to be. I don't have to do it that often. A quarter is probably the most frequent. Monthly is definitely the most frequent, but probably every quarter. If I did a quarter 1% per quarter, I'm only risking 1% of my account to potentially protect, 5%, 10%. If I could weather the storm for a 10% drawdown, I'm going to survive a lot of markets. Obviously, I have some cash and have some agility, and I'm not just dumping 100% invested. So there's ways to survive. Yeah, if I take some new trades, Doris, it will be. If there's new trades, there will be. We've just had like a multi-week melt up. So I've warned that we could roll over a little bit, but this is not the spot that I would say I want to hedge. I mean, part of me thinks that the Trump administration has flipped so hard the other way that I think, if anything, the hedges that we put on originally that are still good for September, October, December, I actually think they're still valid. They're still valid. So if we have like a nasty spill, we're going to have some hedges in that crash insurance masterclass that are going to pay really, really well. So the hedges that I took that are out to December, those will pay really well. So keep an eye on them. Because right now, if I take a look at my overall portfolio, most of these futures trades are hedges. So all these right here, these are all hedges. And they are all down. Why? Well, the market's been up for the last month. Okay. So that's why I'm not winning on these trades, but net, I'm still positive on the portfolio. If these do pay out, these pay out a lot compared to what I'm risking. So anyway. Okay, good stuff. All right, it's 3:51. Day is kind of wrapping up here. I'm going to jump into a 4 p.m. masterclass with my pinch point scanner. I would like to take a look and see, do I have any new trades? Let me take a look here. So we definitely have some stocks in the go filter. Way is a new one today. So I ended up taking 3 new trades this morning on pinch point scanner. Way is a new one. DXCM. I don't remember if that was on the list yesterday. SJM is new. CE is new. DUOL is new. T-Tech is new. AZTA is new. I'm just writing these down for the 4 o'clock masterclass. DOX. I know we did DOC, but not DOX. FWONK. What is that? Is it a Willy Wonka? Is that Willy Wonka's brother? MORN and TYL. Okay. Again, I'm going to spot check these for, average volume, make sure they're liquid, check out the options chain, but that gives us plenty of activity here at 4 p.m. to dive in and see if we can find a couple good trades. Okay, for the get sets, any new ones here? Palantir's get set. Hey, okay, Palantir. It's a little volatile because we had a drop today, but this is a go filter. And then my set filter. So Palantir. In fact, I mean, I've been doing webinars now for over a week on the pinch point scanner. Palantir was a get ready last week, and now it's a get set. So it's looking a little bit better. RKT, that's a new one. That is Rocket Mortgage, pretty much. Nike, oh baby, Nike making some activity come alive. KSS, Delta Airlines, okay. SNDK. All right, we're gonna have a busy class. That'll be exciting. Cool. Broadcom earnings. They have earnings today after market. I mean, I'm not in a trade, so the only trade I put on was a pending order. It's still pending. So here's Broadcom. I didn't get filled. There is a chance this maybe gets filled. We're trading at 261. We'd have to go up about $24, which percentage-wise would be 24 divided by 261. That'd be about a 10.2% move. I mean, if we go up tomorrow and we go up single digits, I might still get filled on the trade, but that would have to be like we push up towards the expected move, maybe get filled on that 90-cent broken wing butterfly. That trade would be something that offers up a trap, a 90-cent credit, and my risk would be $410. So here's what price has to do. It has to blast higher and go about 10%. So I mean, maybe it does, but other than that, it's. I mean, we're sitting here up, 80+% off the lows, 90+% off the lows. I mean, if I was a pot odds trader, I would say that this probably is going to be on borrowed time. Even if we go up for the day, I feel like this thing's going to fade by next week or two. So I wouldn't want to get in the way of this in case it's like thrusted higher, but I would certainly be interested in maybe fading that move with a defined risk trade. So maybe it's not good for like a pre-earnings or during earnings, but a post-earnings, especially if we push higher, I would consider fading that move with something risk defined. Bear put's a good trade. Bear call spread's a good trade. Look to see if it can fade a little bit. I mean, this move is pretty ridiculous if you ask me. I mean, we've seen some cycles here, but when you go up aggressively in Broadcom, it still goes sideways. Up, goes sideways. Up, pulls back. Up, pulls back. Up, pulls back. Up, pulls back. Up. You mean to tell me that we don't have a pullback coming? So we have overbought conditions with divergence. I would expect the pullback to be coming. I'm just not going to step away and step in the way of it because earnings could do this, right? Earnings could gap up higher, have a little follow through, and then it fades. So if I did that and said, well, maybe I'll go out 2 to 4 weeks and put in a high reward to risk trade, high reward, low risk, maybe I'm right. So I think I'll just look at this tomorrow. If it's down tomorrow, then no trade. If it's up tomorrow, though, I might fade that thing. But low risk. Definitely low risk. Okay, just a couple more minutes before closing bell. We are at 59.36. Daily profit play levels held all day. Cool. I didn't take all day. I got out of the trade early around what time was it? When this thing was kind of going up here, I got out around 11 a.m. Around 1 p.m. to 2 p.m. A lot of that profit was offered on daily profit play. The bull put spread that I put in yesterday was a 58.95 by 90. Ended up grabbing more than 50% of that today. That was an expiration for tomorrow. It was nice that we had that little melt up this morning. Butterfly spreads to the downside worked out well. Actually, what's funny is butterfly spreads to the upside worked out well. I had butterfly spreads up here, butterfly spreads down here. So I got paid. Ended up having 3 winners and 1 loser. That netted out pretty well for butterfly spreads. So just a lot of button pushing today. Meanwhile, watching Tesla just fall off a cliff, and we'll see If it gets worse, we will see. I'm sure, I don't know. I mean, I'm sure Donald Trump can make Elon Musk's life a regulatory hell, but Elon Musk is worth how many hundreds of billions of dollars? Like, does he need anything? I'm sure he's okay. But for Tesla investors, this is annoying. All right, 1 minute before the close, and then pinch point masterclass coming up. So I get this in Telegram. Let's go here. Pinch point scanner. 4 p.m. Pinch point scanner. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 tickers to review today. Let's get after it. Okay, so pinch point, we'll jump right over there and have a look-see. Needs humility. I mean, you sure you have that character right there, Lee? I think Trump might need a little humility. I think a lot of people need a little humility. I think humility and the old golden rule could go a long way in this world. But we're in an interesting time where it's like you want to, troll and bully and it's again too much noise. Like seriously, it's like exhausting talking about this stuff. I think a lot of people could use some humility. All right. So, Unrivaled Investing, this channel on YouTube. Elon Musk and President Trump have split up. Why? Fighting over recession. I mean, this is going to be mainstream media now. They're gonna eat it up so much. This is just like they just replenish their buffet plates and just more drama. Get the popcorn. Watch with eyes wide open. Just exhausting. So, all right. I'll let you go. Tomorrow, non-farm payroll. Let's see what the day does. I'm just saying, be aware of the technicals. Right, we're on the right-hand side of this trend line right now. Doesn't really mean anything yet. It's certainly a lot closer. The Bears had a little fun today. The markets are down, right? So tech's lower. Tesla's down. Okay, fine. But index-wise, are we going to take out some lows? If we're actually breaking lows here, I mean, as well as I do, like this gap could be filled. The market can have 3, 5, maybe even 10% corrections. It doesn't really change the bull market necessarily. It doesn't change like the I think Trump and co are going to be pivoting hard to like raise debt ceiling, pass this spending bill. It may not happen. I mean, I think it's in the hands of the Senate right now. I don't think it's passed yet. Let's see what the deadline is. It's supposed to be a summer thing. So let's go. When is the Senate vote for the big, beautiful tax bill? Okay, news about when. So this is from 2.4 trillion added to the deficit. If we pass this bill, increase deficit. Trump's bill, blah, blah, blah. I was looking for a debt or a date. Congress Budget Office says Trump bill. Okay, we get it. $2.4 trillion. We get it. I thought it was 215 to 214 in the House. I'm looking for the Senate vote. That's what I'm trying to find. See if the Washington Post has anything. I mean, I'm sure if you vote against it, your midterm election slash your 2 years probably going to be in jeopardy. That's how the U.S. likes to operate, 2 and 4 year cycles. And my question is, did he? Did we? We'll see. All right, whatever, man. Tomorrow's another day. Intraday made money. It was fine. Right side of the trend line may be happening. If we take out some lows, there's pullbacks. This is why I have cash on the sidelines. Just be aware of it. Just be ready. Okay. So watching the futures market, box on the NQ, and a box on ES. So if price is going to sweep the lows, there's room to fall. Okay. Plenty of room to fall. But if it doesn't, it doesn't. And when I say futures, like this is the news for the US-China trade gap. So if we sweep these lows, are we coming back to that level? It's very possible. 5,700, drop a few percent. Larry, that's awesome, man. Made 10K a day every day this week. Seriously, that's ridiculous. So good, man. Okay, I'm going to jump over to the pinch point scanner. Thanks for coming in today for Thursday. We will wrap it up here for the final hour. Come back and do it again tomorrow. Off we go. So, all right, I'll see you tomorrow. 8:30 a.m. Eastern time will be non-farm. You got the numbers right here. Job numbers looking for about a 127, unemployment rate 4.2, average hourly earnings 0.3 for the month, and we'll see if average hourly earnings are going up or down for the year. So that's tomorrow morning. Pre-market, watch that pre-market stuff, watch futures, maybe some noise. We shall see. All right, have a great rest of the day. Pinch point scanner students, I will see you in the classroom in just a minute.